Good morning, guys. Welcome to this Thursday, July 17th, almost end of the week. Almost halfway through, more than halfway through July as well. Can you believe that? Time is flying. Anyway, the market holding on to the gains. You see the little hullabaloo we had going on yesterday after the Powell were talking about, or Trump was talking about firing Powell, or the market thought that was going on. They squished that. Rumor was nothing to it, and then basically market recovered. And in the overnight, we're pretty much holding on to the gains, a little bit to the upside, but pretty much exactly smack in the middle of this range. So we have come to balance. Uh, we survived the little boondoggle from yesterday, and going into today's trading, we got news at 8:30. We got jobless claims and retail sales, and the retail sales could be a big deal. We'll see how the consumer is doing. A good number there. I think we get the market in a really good mood. We have also have Philly Fed manufacturing, import-export prices at 8:30. 10 o'clock, we get business inventories and housing market index. Nat gas report at 10:30. We have got some auction announcements and basically Fed speakers after that. So that's kind of what we got going. So 8:30 and 10 is what you need to pay attention to. And Fed speakers across bund all over the place as well. Hopefully they don't say anything, which is going to get the market going, but you just never know, do you? So starting off today, guess what? We're going to start off flat out range bound. We are in this range. We've been down here flirting with this lower end. We never got down to the 25 yesterday, but we got pretty down low. We haven't challenged the 25 30s here on the upper end, 63.25 that is, anytime recently, but it's I think that may be in the cards. We were up here a couple of days ago. So far we have been pretty much just going back and forth in the range. So I would start off range bound. I would look to sell strength all the way up here to these upper levels at the 63.30s, which is going to be this level, and the last one is going to be 63.40s. I would look to buy weakness all the way down here to the 62.45, actually all the way down to the 62.25. The only caveat when you have a when you set that range like this is that if you have a move like that yesterday, for instance, started selling off pretty hard, those things you can hop on if you have good momentum and you have a direction move going on driven by a headline or something like that, and you know what it's all about. Yeah, but by all means, try it. But if you're falling back to if it's nothing driving it, but the market is just moving back and forth, algos running it and they're trying to drive it higher and lower. That's just the normal auction process, and that's basically sets us up for to fade the edges as you approach them. So initially looking to sell strength, 63.15s, 63.25s, 35s up to the 45s, so rotations back down. I would say 63.15 comes out. I would be probably leaning towards the long side, maybe a little bit less aggressive on these resistance areas. Still looking for getting short against them, but just never know which one's going to hold. So you just have to watch for a good setup and a trigger. If it looks good enough for you, then you have a trigger going, ID level setup trigger. Remember that. If we have those things going, yeah, then take the trade. If it doesn't work, you can have a tight stop because you're right at an edge. You don't have to have get stuck in a big trade. That's my dog snoring, if you didn't know. Background. Oh man. And on the way down, if they start pushing out some weakness, looking to buy against the 6300 is pretty aggressive. I would look for 6290s, 6280s, 70s, 65s, down to the 55s. That seems to be the more of the inner range right now. Below the 55s, I would probably start leaning towards the short side. Still looking to buy against these support areas all the way down to 25. So this section here, same as on the way up. If they get that far down, I would start thinking about the short side. Still looking to buy against the 55s, the 45s, the 35s, and 25s. But these three lower ones a little bit less aggressively, because at that point you've been moving directionally for a bit, and maybe more to it than just a algo's running it. All right, so that's kind of what we are looking at now. Anything institutionally wise, institutional buying or selling, if that starts rolling in, yeah, they could definitely take these markets higher. I think the market is waiting right now. It's in a holding pattern, waiting for earnings season to really kick in gears, how the earnings comes out, and that's going to be the key thing for this market to either take a leg lower or maybe break out to new highs. And of course, trade deals and tariffs. That's going to be the next big thing. Geopolitically, I think we are pretty much in a good shape there. The Russia-Ukraine situation is still there, but it's I don't think that's the key thing driving this at this point by any means. So tariffs and trade deals, earnings in the short term, that's what we're going to be, the market's going to be keying in on. But starting off range bound, looking to buy weakness, as I said, back down to that 55. So that is 62 90s, 80s, 70s, 65, and then 60s for rotations back up. Looking for short setups against the 63 15s. Above that band, starting to think about the long side. Still looking for shorts against 25, 35, and 45s on the way up for rotations back and down again. So that's how we get started. Let's see how this whole thing shakes out. There's a lot of stuff going. They just announced this big AI investment in Pennsylvania. So there are deals going. There's the AI trade is the one which is hot. It's going to be hot. It's going to stay hot. So if you have money to put aside, it's time in history. It's the time probably you need to invest in that in those stocks. Even if it feels lofty right now, you can probably wait for a technical pullback or something like that. But if you have money, it's a good technology to invest in. It's going to go far. Looking at the bonds, pretty much range bound. So bond market, just they're to the lower end of the range, but they're pretty much still holding it. So we'll see. Watch the bond market here. They're down here at the lower end of that range, 111.16s. They were down here yesterday, backed off a little bit. If they start taking out these lows and start heading lower, that means long-term yields are heading higher. And that's going to be, that could be an issue. Remember, one of the big deal right now with Powell, the fighting with Powell, they want to drop the rates. They want to be able to refinance all the debt Janet Yellen financed using short-term paper. They want to refinance that, or they have to because it's coming due. And the way they had to do it right now is at higher rates. So it's lower rates, especially long-term rates, would be really good. But so now they had to keep rolling it in short-term rates instead. It's just not it's something which is ideal. So be able to put the long-term debt back on long-term debt with a good rate, that's kind of what they're trying to do. So, and they're not going to refinance that debt at 4 or 5%. And it's going to be very expensive. So starting off range bound, I would look for early weakness to see you can retest these lows on the bonds and retest the 24s, 16, 18s, maybe even down to the 11, 12s. So looking for sell strength. At this point, the 112s and the 112.08s. They start trading above the 12.08s. I'm taking off that short bias and going back range bound. But it's early on looking for early weakness to see if they can retest these lows, potentially take it lower. But watch that. If the bond market starts trading lower, that would not be a great sign. That would be something potentially going on if that starts happening. So longer term yields, oh, sorry, higher long-term yields has an implication of inflation expectations. That's kind of what comes into that. Looking at the Nasdaq, Nasdaq also in good shape. Nvidia could start selling their chips to China again. So you can see the AI trade, the hyperscalers, or the guys building these computers. They're all kind of to the upside. But you also have companies providing applications for it, like Microsoft, you have Palantir, so companies like that, which are providing solutions using AI, not just the hardcore crunching power. And those are also way up there. So it's a whole package. Looking at the Nasdaq though, we are up here, up against that above that 23,000 level, and I think we could start with a slight bias to the upside when it comes to the Nasdaq. If they trade below that age, then 23,050, or probably say the session lows at the 20s here, I would take off that long bias. But initially, I would actually start looking to buy against the 80s and the 20s here for rotations back up. So Nasdaq in a stronger position to make new highs. And I'm thinking I'm waiting for that July, August, September weakness to kick in, and really split, taking a little bit of money off the table, and then waiting for that pullback. Or is this going to take off now, given the all the trade deals and stuff they're doing? Because this is a deal-making bonanza going on right now. So it doesn't feel like any weakness is going to be very long-lived. So maybe I may just stay invested on it. Uh, but starting off on a long side on the Nasdaq, looking to buy weakness, see how far they can take it. If they trade below the session lows, I'll take off the long bias and just go back range bound. We have a pretty good defined range on the Nasdaq. It looks like we have an inner range low here at the 22,800s. The upper edge is at 23,000 to 23,100s. And if they for some reason go below the 800s, the next level down is 600. This area here, I would still include it in the range. But as I said, if this trade below the 800s, I would probably hop on the short side and see how far they can run it. Still looking to buy against these lower support areas, but initially with the range we have right now, looking to buy weakness against the 80s and the 20s for rotations back up. Below 20s, take off the long bias. Still look to buy against the 960s, 930s, 890s down to that 850 and 800s. Rotations back up, and that's just trading back down to that little area over here. All right. And on the way up, looking for short setups against the 140s and the 200s with a bit of caution. We're starting with a slight bias to the upside. And if they're going to start trying to take it higher, then yeah, you want to be with that trend, not against it. But there could still be potential short setups up there, so you just have to be a little bit less aggressive about it. All right, so that's the Nasdaq. So ES we start range bound, Nasdaq with a slight bias to the upside. Now looking at the oil and gold, I hadn't traded those for a bit now, and one reason for gold is like too freaking volatile. It's absolutely crazy ass volatile. So it's something which really is if you get around on the right side of it, you'd be all happy. But yeah, it is. Yeah, snoring is better than barking, but he has a pretty loud snore. Anyway, so it's if you can get on the right side on gold on the trade, I mean they used to be like you have a couple of dollar range on gold that's super slow. Now we're looking at like $2-3 per bar. It's like 20-30 tick per bar. It's huge, and so it's very volatile and it moves. It doesn't move the same way as the indices. It tends to move and then just turn it on a dime and then everything else reverses on you. So a little bit more difficult to trade. But right now it looks to me like they're trying to take it lower. So I would start off primarily range bound if you look at a bigger picture. We are looking at they're trading in this range. They're down here at the lower end. I would look right now look to buy against this 26s. If that comes out, I would stay on the short side or look for a rotation, see how far I can take it. You can buy support areas all the way down here to the 3300s, maybe even down to the 3290s. So that's when if they start taking out the 3290, 3300s, start worrying about the short side. Otherwise, I would look to buy against these support areas. The first one and most I would be more aggressive on is the 26s. But below that, we just had to be a little bit less aggressive against the 20s, the 15s, the 9s, 3303, 3292, and 3290s. So this is the area when you get back down here, that's when you have to worry about potentially it breaking lower. But as you can see, yesterday they ran it right up here hard on that news and then complete reversal right back down. And this is like, what is it? It's like 28 up to 80. So say 30 like 50 points. Now you're gonna get on the right side of the gold trade like that. You'll be smiling, I tell you. It happens quickly on gold, but I mean you have to be on the right side of it, and it moves quickly and it moves volatile, with a lot of volatility. So I have stayed away from it. Yes, if I see really good opportunities, I may engage it. But just being the go with type of trading is really difficult on gold because it moves with such volatility. So that's we start off on gold. On oil, we are pretty much in the range right now, and trying to find value. They did extend the range, I think, up to the 68, 60s to 69s. So we have a little bit wider range than that from that initial roll down. But since they concluded the Iranian situation, basically back down again, and now it looks to me like they're pretty much stuck here, waiting for a piece of news to either drive it higher or lower. And my guess would be lower, unless we see something really bad happening in the world, in the Ukraine-Russia situation. I think that's going to be, I think oil prices are going to be heading lower. I mean, they're doing everything right now, nuclear, oil, nat gas, everything to become a energy dominant again. And as they do that, and as supply comes online, yeah, prices are going to come down. You're going to be a lot less sensitive to foreign impacts, foreign shocks, if you wish, like geopolitical events. And so that's going to be a good thing. But right now, I would just start off range bound. So on oil, we've got the levels. Hang on. So looking to sell strength, 67s, 67.50s, 67.90s, 68.30s, up to that to 68.70s. Above that one, I think they may be breaking out to the upside. And on the way down, they're going to buy weakness. Maybe not the 66.70s, but the 66.30s, the 60s, 65.60s, 65.30s, down to the 64.70s, and then the 64s. So buying all the way down to 64, looking for short setups all the way up to that 68.70. All right, so that's how we start on oil, flat out range bound trading. Now, today's the last trading day on the August expiration. For tomorrow's trading, we are rolling that to September on oil. All right. So that's oil and gold. Back to the ES, and so far, okay, we're still holding on to the gains. Let's see what happens. So we got news in about 8 minutes. Retail sales going to be the bigger part of that. Let's see how that goes. If that comes out good, I think we may have a pretty good day, but we'll see how that shakes out. Alrighty, guys, we'll wrap it there. Good trading, and I will see you back at 11:30 for the next update. All right, guys, later.